Hey guys, welcome to this complete guide to all things life insurance here in the UK. This video is an updated video to a previous video we did on life insurance previously, but we've taken the questions you guys had on that previous video, which proved to be very popular, and we're taking all those questions and giving you answers to those questions in this particular video. For example, a lot of you guys asked us, can you borrow money against your life insurance? Can you take money out of your life insurance and invest it elsewhere? This video today gives you all those answers and so much more. This video is split into two main parts. The first part is the core element of our previous video for the people who've not seen it or who need to rewatch it and refresh their memories about life insurance. And the second part is me then looking at those questions you guys asked and giving you the answers to those questions. So definitely make sure you look at the timestamps to this video to make sure you jump to the relevant sections, or feel free to watch the whole thing as a way of getting the full picture on all things life insurance. Now, I'm making this video at this time because I've gone through a very unfortunate event in our lives, a bereavement, losing a family member at the very young age of 39. So this topic is so important because I never ever thought we would ever be talking about life insurance in real life. But this video, and if you watch to the end where I share the additional information, this video reveals to you guys the additional decisions we've made in our own personal lives from a life insurance perspective, and things we hope will help you and encourage you on your journey of considering life insurance if it's something you need for your own life. All right, let's cut to the video and get started. Guys, have you ever wondered if you should be getting life insurance or not? Have you considered whole life insurance versus term life insurance? And have you wondered if this is something you should be paying for decades to come? You know, I've gotten so many questions about life insurance, and it's something that I know a lot of people in our community are juggling with. They're not sure whether they should be getting one or not, if they've got a mortgage, if they've got children, or if they've just got health issues, okay? So today we're going to unpack the subject of life insurance. I'm going to read you a real life letter that I've received from somebody in our community. Hi Ken, I've recently remortgaged my property and I felt pushed by the bank into getting both life insurance and critical illness cover. And they mention the name of the company. I can't mention them, but they are to do with Scotland. So if you can kind of work them out, okay? And they made me get this for the term of my mortgage, okay? Mainly because I'm a single mortgage applicant. So this is a single parent with a family. So they've got some daughters, and the bank made them essentially get life insurance. And she says here, they quoted around £26 per month for 21 years. Total cost of £6,500 for a potential benefit of £122,000. Then she says, this seems like a really long time to be tied into a life insurance policy, so 21 years, but I'm a complete novice in this area and I'm still within my cancellation period, okay? And I'm deliberating on what to do. Then she says, I cannot find any independent information that gives an unbiased view on whether it is normal to tie myself into policies like these that I will be potentially paying for 21 years without any option to review. Maybe I'm looking at it incorrectly because I wouldn't tie myself into a house or a car or other types of insurance policies for that length of time. Ken, is this usual? So that's her question. I wondered whether you may know of any good resources or anybody in the Humble Penny community who could offer me a view. Okay, so there you go. And parallel to that, I got a message from somebody on Instagram who said, Dear Ken, I would love for you to please do a video on UK life insurance. Is it necessary? Term life, whole life? Do you get money if somebody lives beyond the term? Okay, and how do you calculate how much money is enough? Like how much life insurance should you take out? Okay, then they mention a couple of insurance companies, which I don't want to mention because, you know, for legal reasons, perhaps best not to mention, again, to do with Scotland, maybe these companies. Should we get a particular company's life insurance or should we get one from the bank? So quite a few questions there for us to unpack. So I'd just love for us to just consider them one at a time so that we can get to the real answers. And I'll tell you what my perspective is personally, because I've got life insurance. And I'll tell you why I've got it and why I think it's something you should perhaps consider or not. Okay, so what is life insurance? So life insurance is a type of insurance you get to protect yourself from the event of a specific thing happening in the future, typically death or terminal illness, okay? So we don't really like talking about things like this because when you talk about death, people are like, whoa, that's a bit too deep, let's not go into it. But it's actually really important to talk about life insurance because it could potentially be a huge game changer for a family, not just from just protecting a family, but potentially from a wealth perspective as well. Okay, so there are two main types of life insurance to consider. So it's term life insurance, and the word term means that you're getting the life insurance for a specific period of time. So I, for example, with Mary, my wife, we've got term life insurance. Okay, so I've got one for a period of 30 years. She's got one for a period of 30 years. And we've got two different policies that we run parallel to each other. I'll explain later why we're doing that. Okay, the thing about term life insurance and the reason we've gone for it is because it's a lot cheaper. So depending on what your age is and state of health and so on, life insurance, term life insurance can cost you as little as £1 a day. So I'm paying something like £29 per month. That's what I typically pay, okay? And it's just fixed and you're paying that monthly. My wife pays around the same amount as well. Now, the thing about term life insurance is that you are only covered for the term, i.e., so it's an insurance covering for the period that you specified. So in my case, the next 30 years, okay? So if anything happened within that period, then we will get a payout. Now, whole life insurance is a second type of insurance which covers your entire life. And because it's covering you for your entire life, it's guaranteed to pay out. But for getting that guarantee, what you're giving up is that you're going to be paying up to 10 times what you typically pay for, say, term life insurance. Okay, so you can see that what you have there are two different things essentially. So you have one that offers you a specific benefit for a specific period of time. So you dictate how much a term life insurance policy would cover you for, and you dictate what the period is. So you're making essentially a prediction. You're saying, okay, I think I only need this for say 30 years or 40 years or whatever. But with whole life insurance, you don't know when something will happen, okay? So the insurance companies, because they don't have that certainty, therefore quote you a lot more to pay in order to get the benefit of a guaranteed payout. Now, the thing to note about both types of insurance is that they have specific exclusions. So things such as death from alcohol overdose or alcohol usage or death from use of drugs. They've got these exclusions which are really important for you to look out for if you are getting life insurance. And what's interesting about this actually is that these insurance companies have essentially, in a way, created for themselves a really good revenue line, because they've now ticked certain things off, which means that, if, say, somebody passes away, based on those exclusions, their claim would not be honored essentially. So these are things you should definitely make sure you watch out for if life insurance is something you want to take up. Also watch out for the fact that a lot of insurance companies typically upsell you critical illness cover as from life insurance. You might get life insurance and they say, oh, but life insurance only covers death or terminal illness. And they say to you, oh, well, what if you suffered critical illness? Okay, what about that? And so they then upsell you critical illness cover. And these tend to come together packaged when you take out, say, a mortgage or, something to that effect, or you're going to do a remortgage. Okay, so watch out for that as well. Now, I'm not saying that you should not get critical illness cover. I would say that you should consider your own personal circumstances. So me, for example, I've considered, say, my top 5 risks in my life, for example, okay, and considered them and asked myself, well, of all these risks, which ones can I can I take care of without it directly having to cost me money through insurance? Okay, let's say health is a risk, for example. So I've chosen to kind of live a life that maximizes my health. So I live a life that focuses on dieting and exercise and so on. So therefore, I'm not that worried about my health from that perspective. But if there are aspects of my 5 risks that I feel need to be covered, say for example, at the time when I took out the insurance, the fact that I was the main breadwinner in our family, okay, as at that time, it meant that we had an exposure and something that we thought needed to be covered by an insurance product. Okay, so you should do the same analysis essentially to look at what are the top 5 risks in your life at the moment, okay, and which of those could you deal with without any money? Because there are things that are within our control that we can deal with without any money, and which of those, if at all, could you deal with using something like life insurance as a product. So what does it cost to take out life insurance? So I mentioned to you earlier that I pay £29 a month for term life insurance, and my wife pays around the same amount as well, okay? So how did they come to that £29? Now, it's typically based on quite a number of factors. Things such as, what's your current age? What's your current lifestyle? Do you smoke or not? What's your current health situation? How much cover do you want? So how much life insurance cover do you want? And for what period do you want that level of cover for? And these are all just inputs that go into a calculator, and that calculator would then work out for you what they determine to be the amount that you should be paying every single month. But please make sure, if you're doing this, to make sure that information you submit to them is absolutely accurate, okay? Do not fudge any of it, because when you come to claim, they will figure out absolutely that there was a bit of a fudge. So make sure the information you submit to a life insurance company, if you want to get life insurance, is absolutely accurate. So do you need life insurance? Okay, this is the big question. Should you bother getting life insurance? There are 3 reasons why I think life insurance is something you should absolutely consider getting in your own life. Here are the reasons, okay? Number 1 is that you've got a mortgage, okay? So if you've got a mortgage, this is something to consider, okay? Number 2 is that you've got some dependents, so you've got some children, okay? So you might be a married couple or unmarried couple, but you've got some children, okay? Or you might even be a single parent with children. If you've got those situations, life insurance is something to consider. The third is where you have a situation where there's an imbalance in incomes between you and your, say, partner, for example. Okay, so imagine you're the main breadwinner in a family and your partner maybe is a stay-at-home parent or is a low earner. Okay, so you really want to be protecting against the risk that anything happens to you as a main breadwinner. Now, you could have 2 out of 3 of those situations applying to you. You might have 1 of them applying to you. You might have all 3 applying to you. So I'd highly recommend life insurance if you have at least 1 of those situations applying to you. Now, just because I'm saying that does not mean that you have to get life insurance, because I'm not offering you financial advice. But what I'm saying is you should really, really think hard about whether you should get it. So I'll give you an example with my personal circumstances, okay? So when we still had a mortgage, so we took out our life insurance way before we paid off our mortgage, and we took out the life insurance when I was still the main breadwinner in my home. And we took out the life insurance because, again, we've got children, okay? So for me, all these circumstances applied. But now, in fact, with the mortgage, when we took out the life insurance, we had a very little amount of the mortgage left over. But still, my decision was not based on the amount of the mortgage we had. I kind of saw the life insurance slightly differently. I saw it as something that would be a really nice payout someday in the future if something happened, okay? And me and Mary got 2 individual policies because, say if anything happened to me, Mary and the kids would have a potential claim. If anything happened to her, then me and the kids will have a potential claim. Now, obviously, we pray nothing happens and we hope nothing happens, but these are just products that we've put in place because, we know life doesn't always just, as I've said many times, carry on a straight line. And the reason we've got 2 separate policies rather than 1 joint policy is so that if one is claimed on, yeah, the other one carries on for, say, our children to claim on that. Okay, so that's why we've done two separate individual policies. Now, you can get a joint policy, nothing wrong with that. But for us, we thought the best strategy really was to get two individual policies just to give ourselves the maximum level of protection. So how much life insurance should you get and for how long? So this is how we thought about it in our own personal lives, okay? So when we were taking life insurance, we thought, what do we currently earn as at that time? And we wanted at least 6 times the annual income of our household. That's how we looked at it. Now, another way you can look at this is to say, well, what is the amount of mortgage I've got, right? And how much income would we need for a period of time? So say over the next 20 years, yeah? If we live a particular lifestyle, so you take the amount of mortgage that you've got left as a debt and take the amount you think you need per annum to live on and work that out over a period of time and bundle that together as an amount and look to see what that works out for you from a monthly payments perspective. So that's how we looked at it, from a kind of how much do we need to protect for. Now, remember I said to you earlier, the mortgage for us was a really tiny amount, it was a small amount. It wasn't really the big driver, because when the banks try to sell you life insurance, or when any of these companies try to sell you life insurance, they say to you, oh, this is to protect you against the possibility that you can't pay off your mortgage. And that's a legitimate, in many cases, it's a legitimate point to make, okay? But for us, our personal circumstances, and you should look at this from your personal circumstances, for our circumstances, the mortgage was not the biggest driver. What was the bigger driver was, if anything happened, what sort of lifestyle would the remaining partner and the children be living? What would life look like then, okay? And how much money would we like for them to have? So we did ours over 30 years, okay? Now, why did we do that? Because we saw the next 30 years as the biggest areas of risk in our lives, okay? Now, we might take out another product in the future that extends that period, okay? Now, who knows? But at the time when we took that out, we saw that as a decent enough time period for us to insure against. Now, a good way for you to perhaps consider this is to say to yourself, what is the higher of your mortgage term and the number of years left for you to potentially retire, okay? You should be looking to protect for at least that period of time, okay? For at least that period of time. Now, we're in a bit of a not complex, but a bit of a unique situation. Unique's the better word, in that we're now without the mortgage and we're now financially independent. Do we still need a life insurance product? And for our unique circumstance, our personal circumstances, we see the amount of £29 a month as quite a small amount to pay for the potential benefit. So this is something you need to consider for your own circumstances. Is the amount they're proposing for you to pay each month such a big deal for your level of income and your level of household kind of wealth, as it were? Okay, for us, we see the potential that it might pay out as a much more significant thing compared to the £29 a month that we are paying. So I'd really urge you to apply the same thinking and thought process to your own personal circumstances as well. So what providers should you use for life insurance? There's so many providers out there. You know, I'm just going to just throw some names out there, but these names, again, I'm not offering any form of financial advice. They include companies such as Aviva, Scottish Widows. You might even get providers from your own personal bank, okay? Now, what I would say straight away is that where possible, keep your mortgage provider separate to the provider who is offering you life insurance. Typically, because these mortgage providers, what they do is, their big thing really is to try and upsell you critical illness cover. That's really it, because they want to bundle together life insurance and critical illness cover in addition to possibly offering you a mortgage product. So for them, it's like ka-ching, they are absolutely laughing. And depending on the type of product that you get as well, so if you get, say, whole life insurance, yeah, this again provides them with an even bigger potential for generating income. So advisors, for example, people who offer you advice, would by far prefer you to get whole life insurance because they're getting huge potential commissions from selling you that type of product compared to selling you, say, term life insurance, which is a lot cheaper. So this is something to make sure that you watch out for. Now, in terms of providers, we used a company called LifeSearch. That's what they're called. You can Google them. This is not me offering you any form of advice. That's what those guys do. LifeSearch offer you financial advice for this marketplace of life insurance. Then there's a non-advised market, which you can also Google and find out more information about. But I'm just going to tell you what I know from my own personal circumstances. They will actually take your circumstances, all the information I mentioned earlier around your age, your health situation, how much insurance you want, how much period you want it for, whether you smoke or not, all that stuff. They'll take it all into account. Then they'll actually personally tailor an insurance product to you potentially. Okay, that's something you should consider. There's a non-advised world. Okay, remember, LifeSearch are in the advised world. There's a non-advised world where they essentially take all those inputs but do not offer you any advice. So they don't lead you onto a particular product. They just say to you, here is a roster, here's a list of potential products for life insurance that you may want to consider. And then you then have to make your own decision. There are various companies. One of them, for example, is called Reassured. You can kind of Google them. Again, I don't get paid anything by these companies. I'm just mentioning them for your information so you can look them up for yourself, okay? We personally use LifeSearch because it was the first company we came across and a friend recommended them to us. And so we used them for our own life insurance purposes. Okay, so just to close this subject on life insurance, and there will be many more questions, but I wanted to just highlight a few things that I possibly glazed over, okay? The first one is that life insurance can be a wealth creation tool. For some people, this is a way in which they transfer wealth onto their children and potentially their children to come. So life insurance shouldn't just be viewed as something that's just, something that you might just need for just yourself. That's the point I'm making here. Second point is life insurance is not a necessity. You don't have to get life insurance if you don't want to, but you should really strongly consider life insurance if you are the main breadwinner in your family, if you've got some dependents, i.e. children, and if you've got a mortgage, okay, or if you've got a combination of those three, really consider very strongly whether you should get life insurance. The third point is the earlier you get life insurance, the cheaper it is for you over time. So we're just paying £29 a month and that's it. We're not paying anything else. It's not increasing every year or anything like that. It's just that same amount over time. And that's it. Okay, so really consider as early as possible whether this is something you should consider getting. The fourth point is that provider you choose for life insurance matters a great deal. I knew a family member who chose a mediocre life insurance provider, and sadly when they passed away, their children could not claim on that life insurance policy because it just wasn't a high quality life insurance provider. I'd really highly recommend getting a provider who has some reputation in the marketplace, who is known to be an expert in delivering these life insurance products if it's something that you want to get for yourself. The overarching point here is to make about life insurance is that life insurance should be a big part of your life design from a financial perspective if you deem it necessary. You don't need life insurance, but if you think it will help out for the various reasons that I've mentioned, you should tailor it to your own personal circumstances and not do it because other people are doing it or because other people are not doing it. So think very personally about this. It has to be about you. This is why I stress all the time in all my videos, a lot of these financial decisions have to come fully from a deep assessment of your personal circumstances. And if you feel that this is a critical element or an important element potentially of your life design, then you should factor it in because they end up being quite cheap potentially over time for the potential benefit that you might generate for yourself. The other point to really consider if you've taken out life insurance or if you want to take one out is to make sure that you put your life insurance in trust right from the very beginning. So what I mean here is The companies that will help you to take your life insurance can help you essentially put it into a trust environment. What that means is that that life insurance policy, when it pays out eventually, if it does pay out, but when it does pay out, the proceeds of that life insurance are outside of your estate for inheritance tax purposes. Okay, so this is just a random point to make, but a potentially really, really important one, because putting your life insurance into trust is something you can get done for free. In fact, there should be a form given to you. If no one gives that to you when you take out life insurance, just make sure that you ask for it. It's a really, really, really critical point to make if you want that to be outside of your estate for inheritance tax purposes. All right, so here's the first question. I'll put this up on the screen. You guys said, question was, thank you for this, the humble penny. I've seen lots of videos about US life insurance policies that you can use to take money from to invest in other areas, okay? Can this be done in UK policies? Yeah, so essentially, can you take money from your life insurance and invest it elsewhere? And somebody else again asked a similar question that says, does the UK do deals where you can borrow loans against your life insurance policy? And if so, what are the ramifications of that? Okay, now, to answer this question for you guys, although I knew the answer, I wanted to be absolutely sure. I called up 3 life insurance companies, Legal & General, Cavendish Online, as well as the broker Life Search. And I asked them the same question, can this be done in the UK? And the answer was unanimous. The answer is a no. You cannot borrow money against your life insurance policy, whether it's a term life insurance or even a whole life insurance policy, such as a permanent life insurance policy. You cannot borrow money or take any money out against any of those types of insurance policies, as our friends in America are able to do to a great extent, okay? Now, you might be asking yourself, why is that? Here are the reasons. I'm going to look at my phone to make sure, because I've written the answers down. The reasons are that these types of policies, which were similar to endowment policies, were withdrawn from the market like 5 to 10 years ago, because they were massively missold to people. Effectively, people were paying more into those policies than they were getting out. And the UK is far more regulated as a marketplace than the US, okay? So the decisions were made to get rid of those types of policies. So those are gone, okay? That's the first key point. The second key point is that whole life policies, which is what you might have been able to do this on in the UK, whole life policies, which are guaranteed to pay out, by the way, on death, for example. These policies only pay out on death in the UK, is the point I'm making here. Yeah. Whereas in America or in those previous policies, there were other conditions that might be related to it. Whereas in the UK, the only condition or the primary condition for which you can claim on those, like a whole life policy, is in the event of death. So death is the activator for when you can claim on that policy. Although, by the way, for a term life insurance policy, which is the one I've got, I've also got cover for the event of terminal illness, yeah, like cancer and that sort of stuff, yeah. So just mentioning that. And then the final reason why you can't do it is because the insurance policy, a whole life or term life insurance policy, does not have a surrender value. Yeah, so there isn't a value that you come and say, you know what, I'm giving up this life insurance policy, therefore I'm getting this payout. So it's not like a property with equity in it or anything like that. It's simply an insurance policy for the protection of an event, which is death or terminal illness. Okay. Next question up on the screen. Issa Babe says, my husband and I have life insurance through our jobs. We also have 4 children. Do you suggest we get different policies separate from our jobs? We are both in our 40s. Thanks. Okay. Now, first of all, congrats for having life insurance through your job. And anyone who might be wondering if they've got life insurance should check with their employer to see if it's one of their benefits at work, because that then could determine how much more you want to get as a policy if you want to get one. Now, one thing I'll tell you from personal experience is that I know of somebody who had life insurance at work and unfortunately got made redundant after having that life insurance for so long. And of course, that life insurance that they had also meant that they lost it because they got made redundant. So our own recommendation, Mary and our suggestion would be that you should always have something for yourself, because there is no permanent job anymore in the world. There's no permanent job. People move jobs all the time. So you should always look to protect for yourself. Now, in your scenario, being a couple with children, I'd suggest having your own personal policy and having two separate policies between you and your partner. So therefore, if one policy is claimed upon at one point, let's say, for example, in maybe in a few years, then the next policy could be claimed in many more years after that by the next, by your children potentially. Yeah, so one partner claims on one policy, and then when the other person ceases to be around anymore, the children can claim on that policy, if that makes sense. It's a way of kind of hedging things a little bit. The next question up on the screen says, "Hi Ken, what is your take on life policies that the premium keeps increasing yearly? I think they are referred to as indexation policies. I do not like policies like that at all. I would completely avoid them. What you want is a policy that just has a fixed amount. Yeah. Like for example, I used to pay £29 a month, thereabouts. Mary and I, the same amount each every month. Yeah. But I'll come to, we've changed our amounts and I'll tell you why in a minute. But one thing I'd say is you want a fixed amount because as prices go up over time, you effectively want that amount to become almost like insignificant, really. Because over time, as inflation increases, that fixed amount you're paying starts to actually have the purchasing power of that money is actually a lot lower. But the value you're still getting from an insurance perspective is still quite significant, okay? Which is why I quite like having a fixed amount that I pay out each month, okay? And then the next question was, and this is why I'm going to tell you what the update is we've done for, in our own personal lives. The next question on the screen says, at the end of term life insurance, if you are still alive, then what? Would you need to reinsure yourself at presumably higher premium rates, or do you get a payout and transfer to a new policy? Now, the answer to that is that there is no payout. It's insurance, right? There's no payout because the activating event, the main event didn't happen. Like you stayed alive, which is great. At that stage though, presumably at old age or much older age, the needs in your life would have changed quite materially. So for example, you might not need the same level of cover. You might not even need that cover for as long as you might have needed it. Yeah. At that stage of life, there'll be other products. Like for example, my mum, for example, the type of cover she's got is quite different to the type of cover I've got, because her cover is a much more specialist product, and it might have additional things like funeral cover and that sort of stuff that might be a requirement because of the much later stage of life. Yeah. So that's the kind of thing you want to be thinking about when it comes to that. But if you did want to take on more life insurance at a later age, or when your term of life insurance ends, yes, the premium will likely be a lot higher because you're not as healthy, you're not as young as you were, and that sort of thing. And you're obviously taking that policy out much later in life. Now, I mentioned that I would give you an update on why these subjects have become much more important to us. Given we've been dealing with a very difficult, it might not look like it, but because obviously I'm making a YouTube video, but make no mistake, in my own private space, I've had many breakdowns on a personal level, Mary and I, having on the back of losing a family member. And this has brought many subjects up, like life insurance, because I've seen it play out in real life. Because we lost our brother-in-law, who very sadly was only the age of 39. And we never thought we'd be talking about life insurance and all this stuff at this stage of our lives, because we've seen it, because we've experienced, because it's been this tangible, real life. Whew, it's made me really reassess. We've got life insurance. Mary and I've got both got life insurance. But what we've done actually on the back of having gone through this very emotionally crushing experience of losing a family member and dealing with the ramifications of that, particularly when you have a family, you have children, you have a spouse, all these things, and it happens, when you're quite young. The ramifications of that are that we've decided to increase our life insurance cover. So even though we don't have a mortgage, and we're in a decent place financially, we've actually increased our life insurance cover in terms of the term from 30 years to 46 years. So take my age now, I'm in my late 30s, add 46 years to that, that's how much cover I've basically got. Same as my wife, Mary. Yeah, exactly, they're like mirror policies, but they're individual policies, which obviously meant that our premiums went up. Our premiums went up to around £90 per month. Yeah, and that's around £90 per month each. Yeah, so you might be thinking, wow, that is insane. Yeah, however, our policies are actually quite significant policies on each, such that, like, God forbid, if anything ever happened, the other person, like, and the children, they will be fine. Like, it's a really, it's more like nearer a 7-figure type coverage, So my point here is like, I'm just sharing that just to give you a sense of reality. Like, I've been through it. Like, I've been through this phase of planning a funeral and dealing with losing a family member and dealing with admin, life admin, and I've been through it. And we make this channel exists so that you can say someone who's been through stuff. You've seen Ken and Mary, they've experienced stuff, and they're sharing from a real place. So I'm giving you that raw perspective so that you can really, really go and think to yourself, do I need life insurance? And if I do, what do I need to do now? Now, not next week, not tomorrow, not next, do it today. Because I tell you, as someone who's lost somebody very recently in the last few weeks, I'm talking the last 3 weeks, whew, this life thing, yeah. A lot can change very quickly. That's all I'm going to say. Okay. All right. That's the update. And I hope that helps you. If you've got any questions, by the way, please jump in the comments and let us know. Take care, people, and speak to you soon.